Hi, this is Mohammed again from Ibiss and Co. Today I'm going to talk on enterprise investment scheme, which is EIS scheme. We have a lot of clients where we have helped them not only setting up the scheme, as well as we have the investors who have taken tax relief through making investment by the EIS shares. What this EIS scheme is for, this is the scheme which is designed by the HMRC to raise finance for those companies who are starting their businesses. So how does the scheme work? EIS companies need to first get registered with the HMRC to get the status of EIS. And, if the investors, if they invest in the new shares of EIS qualified companies, they get a tax reduction in their tax bills. How does it work? I can give you a small example. Let's say if an investor makes £100,000 worth of investment in the new share capital of EIS company, he can get up to £30,000 worth of tax reduction in the tax bill for that current year, or he can carry it back £30,000 worth of tax reduction in the preceding year. So this is a win-win situation for those persons who have a huge tax bills and they would like to reduce the tax bill up to 30%. So the maximum amount a person can subscribe in EIS shares is £1 million per tax year. So let's say if a husband and wife, if they have a huge tax liability, if they make investment of £2 million together, so then in that case, but when I say together, it means you need to make the investment in two different EIS approved companies. So your tax bill can reduce by £600,000. It's not only EIS scheme is designed to reduce your income tax bill, but also you can defer your capital gains if you make the investment in qualified EIS shares. How does this work? Let's say if a person has a chargeable gains, let's say £100,000, and if they invest £100,000 into EIS shares, so they can defer until they keep that EIS shares, meaning when they will dispose of EIS shares, then this chargeable gain will be chargeable to CGT. So not only this is a benefit for the companies they are raising the finance, but also a tax reduction for the taxpayers. If you are in a situation, if you are a limited company who is looking to set up this scheme, please call us. We have helped a lot of our clients in setting up this scheme because this is not an easy thing to get a certification from the HMRC. There are a lot of forms to fill up, and there's tight deadlines whereby you need to fill those conditions. Yeah, the company to qualify for EIS, there are a few conditions. Number one is that company should be unquoted company. Means a private limited company which is not listed in any stock exchange. Number one. Number second, the employees condition is that this company should not have more than 250 employees. There is an asset condition which is before raising capital through EIS, the company's the total assets should be less than 20 million pounds. And on the other hand, there is also a condition on the trading activities. A company should only be doing certain activities which can be we shouldn't be those activities which are not accepted by HMRC. So some of the activities which are not accepted by the HMRC or are banking sector, accountancy, land and land related activities, i.e. property development, nursing homes, etc. So these are the trading activities, which a company shouldn't be doing it if you want to qualify for the SEIS shares. On the other hand is, yes, who is qualified to take the advantage of tax relief? The person who can be qualified is that the one who is not connected to the company. When I say to the connected to the company, it means he shouldn't be employee within the company. Number one. Number second, he should not be acting as a director. When I say these two things, it means he should not be in a position 1 year before and 2 years after making an investment in the SEIS shares. Number second, that person should not be controlling the company. The controlling definition is that person, including his associates, should not having more than 30% shares in that particular company. And the associate, when I say the associate, means spouses and the partners, the civil partners. But like husband and wife, they cannot mutually control the company for 30% condition to qualify. But if the brothers, sisters, and friends does not include in the associates. So these are the conditions which a person should be having if they want to take the tax advantages or tax deduction in investing in SEIS shares. The good thing is that the person need to qualify if they hold the shares until 3 years. Meaning, let's say if someone if he sells the shares within 3 years of making investment in EIS company, then the tax reduction, whatever they got at the initial stage, will be clawed back. Meaning they might have to repay that the tax reduction which they have taken at the time of making the investment. Likewise, if a person holds the shares for 3 years, then there is no CGT at the time of disposal, meaning even if the value of your shares goes to double or 3 times or 10 times, there will be no CGT on the disposal of those shares. So which is a very, very good advantage of having investment in EIS shares. Let's say if a person sells or dispose of the shares at loss, so you still there is a benefit of you can claim that capital loss against the income of that tax year when you have sold those shares. I can describe by an example. Let's say if a person is making an investment of £100,000 and after 2 years or 3 years when he sells that, the value is only £10,000. Yes, so actually your loss is £90,000. So £90,000 worth of loss minus you have the income tax advantage you have taken at the start, the net amount you can claim against the income tax bill of that particular year, meaning in the year of disposal. Yeah. To wrap up, the whole thing, if you are in a situation where you are thinking to make investment in EIS schemes, please don't hesitate to contact us, as there are loads of more questions and the queries which we have not answered in this short video. So please call us on the number shown on our video, and further I will add that the first 2 hours are absolutely free, so we don't charge first 2 hours consultation. Thank you.